It's time again for another Southern California housing market update where we run through the latest numbers for Southern California. We pull them straight from the multiple listing service before you get them anywhere else. And we're going to tell you exactly what's going on for August of 2022. At this point, normally I'd say something pithy about the numbers, and then I'd say stick around to the end because of this, or this. But just for fun, I actually don't know what the numbers are yet. They're run by my operations director, Michelle. She puts them into a chart, and then I put them into the graphs that you see, and I haven't done that yet. Normally, I record that section, and then I do the intro, so I know what to say in the intro. But just for fun, I decided to mix it up this time. So I actually have no idea what the numbers say yet, though I will show you in a minute. I'm going to make some predictions. My guess is pending sales are remaining low. The other thing we'll show you are the Altos research reports, which I haven't looked at yet. I think inventory is starting to turn. I don't think we're going to see that dramatic increase we've seen. So there are my predictions. I could be completely wrong, but we're going to run through the numbers together so you know and I know. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best data-driven decisions in this crazy market, and we're here with another one of our updates. I'm excited. I can't wait to get into the numbers because I haven't seen them yet either. So if you're ready to dive into the single family and multifamily numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button. And let's get started. So I put the data into the graphs you're about to see. So now I know where things are headed for single family and multifamily. And I say wow. And I don't often say wow at the data. I did say wow through 2020 and 2021 when things continue to go up. This is a different wow. And I'm about to share with you very crazy days. Let's go ahead and take a look at the sold. So the gold line, the yellow line, those are the sold properties. You are going to see for every county we cover, absolute record lows in the number of properties that have closed. And that means way fewer transactions. Why are they so low right now? Because the pending sales have been so low. And when interest rates increased dramatically this year, we saw pending sales drop, ultimately leading to fewer closed sales for the first 2 weeks of August in 2022. And some of these numbers you'll see maybe 50% of where they were in just a couple of years ago. Crazy lows. But here's what's even crazier. Let me get sold out of the way. In 2018, when rates dramatically increased and almost hit 5%, we saw the pending sales drop and we saw the increase in the number of new listings. And I've talked about this many times. This time around, we got close to 6, went through 6. They've since backed down. We're still above 5% for mortgage interest rates. Look at the number of new listings. Look at it compared to the number of pending sales. So pending sales are at a record low. We're going to see that in every county we cover here. New listings are at a record low. So we're not getting that big increase in inventory and new listings that we had the last time rates went through the roof. Buyers and sellers are hearing the same bad news that we're hearing in this marketplace right now. Now is not the time to sell. And just 6 months ago, it was an amazing time to sell. Now nobody wants to sell. Nobody wants to buy. We're seeing that in the sentiment index. When you look at new listings this close to pending sales, this is actually an extreme seller's market. And I know that seems counterintuitive. Everybody's saying, don't buy right now. It's a crazy time to buy. People are worried. But it is a seller's market. So you really should, as a seller, if you're considering selling, it's still a great time to sell. There's still people buying. That's why we have pending sales. And there isn't much competition. In fact, if you look at the data here, the first 2 weeks of August in 2022, this is a tighter time for new properties hitting the market than we saw even in 2020 and 2021. And those were incredibly lean times. All right, moving on to Los Angeles. Again, the same trend, a lower number of new listings. Pending sales are down, but you can see the gap between, and we talk about this all the time, the gap between the new listings and pending sales. The tighter it is, the more of a seller's market it is. And we can see that based on what we're seeing for new listings and pending sales, while down, this is actually a better time than 2018, 2019. 2020 was even a little bit wider than the gap we see. So numbers are down and new listings and pending sales are down together. This is different from the global financial crisis when we see inventory continue to go through the roof. This is different from 2018 when rates went to 5 and we saw inventory increase. Again, the market continues to wow us and continues to do things that we would never expect and nobody expects. Moving on to Riverside, a similar thing. Now we can see the gap between new listings and pending sales is equivalent to 2021. It is smaller than 2018. It's similar to 2019. 2020, the gap was smaller. Nothing in these numbers is showing us a reason to believe that inventory is going to go through the roof. And inventory going through the roof is what we need. We need supply to increase with this low demand that we have now. Supply increase, that would lead to price reductions. Nothing in this data we're seeing right now, and this is actual data. This is not a realtor spin on data. These are the numbers that are pulled right from the multiple listing. Nothing is showing a reason to believe that we're going to see big, huge price drops because there's still not enough inventory. In San Bernardino, a similar story. We have a tight gap between new listings and pending sales. You can see 2018 was a tougher time to sell. You had more competition as a seller. If you look at the ratio in 2018, which was a normal market, between pending sales and new listings versus 2022, with all the doom and gloom out there, it's actually a better time to be selling now than it was in 2018. And maybe a little better than 2019. So despite the doom and gloom, this is still a seller's market. In Ventura, all over the place as usual. And here's where we see pending sales at essentially 50% of 2020. That's absolutely crazy low numbers. But the gap isn't extreme. We have record low number of new listings. So as long as listings stay low and pending sales don't disappear completely, it's still going to remain a very similar market to what we've been in for the past couple years. And finally, San Diego, if you remember in the Altos research reports, we're going to go through those in a bit. It was 100% a seller's market like 4 months ago, and that's shifted like all markets have. But still, this is a solid seller's market. It's very similar to 2018 in the gap. And it's a good time to still consider selling in San Diego. And here's your Southern California multifamily market update. One of the only places you're going to get this data, and it's worthwhile looking at these numbers as well. Single family and multifamily have tracked differently during the pandemic, but there's some interesting things going on here that I want you to see. So Orange County right now, we actually have a pretty healthy number of new listings. It's not too different from years past. 2020, there was a big spike in new listings, and that was because people were worried about COVID, and a lot of landlords were trying to get rid of their properties. We had worries about people paying rent. But since then, in Orange County, right now, there's no eviction moratorium. We can see that there's actually the smallest gap between the number of properties under contract and the number of new listings. So this is a solid market in OC multifamily, and we're seeing that out there. We have some mixed use listings that have come to market, and they would fall potentially under this as well. So that mixed use means in this particular case, there's a residential and an office component. So we'll do some more content on mixed use. Right now, I'm super bullish on multifamily, and we're seeing that in construction, which I will bring construction numbers in as well at some point in time. Because of the strength of multifamily, the fact that rents have gone up as much as they have, the buyers out there that have decided not to buy, it's not a good time to buy, they're going to either remain renters or become renters. Don't forget that we have a big shift of folks coming into the market and forming families. Here's what's interesting. We're going to see it in some of the data in these other counties. We're seeing a reduction in the number of new listings. So listings are down in multifamily. Despite the optimism that we have in the multifamily market and rents going up, the property owners are hearing that bad news that's out there with interest rates and buyers not buying, and they're not deciding to list their multifamily properties, but we still have demand. So we're seeing now that the gap between new listings and pending sales is decreasing. It is becoming more of a seller's market in multifamily, and for no reason. I mean, now would be a great time for sellers to list. There is a lot of demand out there, but I think this trend is going to continue. We're going to see fewer multifamily buildings on the market. And another possibility is maybe the potential sellers have decided to hold because things pencil better because they're able to increase their rents. Although AB 1482 makes big increases tough on current tenants. The other important thing to mention for LA, as I always do, is they are still under an eviction moratorium for LA City and LA County. So check out our content on that. Moving into Riverside, here we see the number of new listings are down, but you can see that the number of pending sales are up. So that gap is the tightest it's been. So this is an extreme seller's market for Riverside multifamily. It's a solid market. San Bernardino, I mean, you can see we're almost into a twist like we talked about for single family for the longest time. Now we have new listings and pending sales at the same number. So what does that mean? Inventory is drying up in San Bernardino because the owners are hearing bad news. Instead of our usual of around 50 properties that would be listed in the first 2 weeks of August, they're not listing. They're worried about the market as owners, so they're not going to sell, or they're happily raking in money because their rents have gone up. Inventory is down. Extreme seller's market in multifamily right now. And Ventura, again, all over the place, but it's actually, this is one of the most consistent charts we've seen for Ventura. I always pick on them. They're all over the place. But what it is there's just fewer properties there, so it tends to skew the numbers. But you can see consistently 10, 9, 12, 10 new listings. So there was a pretty consistent number of listings in the first 2 weeks of August, and then we get 2. And we had 3 go under contract. You got a twist here. This is a crazy hot market for multifamily. This is surprising, and I made my prediction in the beginning, and I didn't really make a prediction for multifamily, but I wouldn't have predicted this, so I would have been wrong had I made a prediction for multifamily, and I'm willing to admit that. And the reason I was wrong is because it's becoming a much more extreme seller's market because owners aren't listing. So again, here we see new listings down. The trend for properties under contract has gone up. It's solid, and we're getting a twist. So hold on to your hats. The market for multifamily is heating up. And don't forget that we're real estate agents based in Southern California, and we can help you whether you are looking to buy or sell single family, multifamily, or mixed use properties. We have a link below so you can reach out. Let's dive into the Altos research reports, and you know that you can subscribe to these. Any city or zip code can be sent to you. Several counties can be sent to you. There is a link below so you can do that, and I highly recommend it. You can get these every week and be tracking where things are headed. We're starting at the national level. Let me get the 90-day average out, and lo and behold, what do we see? We see a leveling off of inventory. That's the most important number to me right now. If inventory increases, that's when we get into a point where suddenly it could flop from a seller's market to a buyer's market. So you're going to want to look at the market action index on each one of these. But we can see that inventory at the national level has slowed down on its increase. You can see that it has not even hit the same levels of 2020, and it's nowhere near 2019, a more normal market at this point in time. So that's important to see, that sellers are putting their foot on the brake. They're not listing. We're not getting the dramatic increase we need in supply in order to lead to dramatic price reductions. So keep on tracking this. Let's look at the state of California. And look, California, it was worrisome. I talked about this. We saw this huge increase. It was very quick, and we're going to see it in some of the counties. But look, it has leveled off. The inventory now is slowing. The increase is slowing. So at the statewide level, we're not at 2019 levels of inventory, a normal market. Let's go into Orange County. Similar thing, leveled off. We're not even at the 2020 levels of inventory. So we can see that the market has adjusted itself. It is slightly less of a seller's market. You're going to see that in all the counties we're covering, but it's not dramatically less. So can you come in and offer 50% off on a property? The answer is no. You're not going to get unless it's priced double, which maybe there are some unrealistic sellers out there and unrealistic agents listing it. But we're not seeing market conditions where properties are going to go at 50% off. Here we are in LA. We saw the dramatic increase. We quickly raced above 2020 levels in 2021. We were approaching 2019 and things have leveled off. So definitely sign up for these reports so you get these in your inbox. You can look at all the other numbers and all the other data that's pulled up. This weekly, you're getting the new numbers. This is what you need to be watching. By the time it gets to some of the other resources out there where YouTubers are reading the news, that's old news. You don't need to hear what happened in June or even July at this point. You need to know what's going on in August. Similar thing for Riverside. Inventory is leveled off. We're not at 2019 levels. How are we looking in San Bernardino? Less of a seller's market, still a seller's market. Inventory is leveled off. This is one I said, hey, we got to watch because it went up so quickly and it surpassed 2020 and 2021. With the interest rates and demand going down, it looked like they could get to a point where it would be a problem for sellers and prices would drop. But it's leveled off. We're not going to hit 2019 levels. How about Ventura? Crazy Ventura, where things are always up or down. It's also leveled off. This is the most Ventura has looked like the rest of Southern California in the longest time. So we can see that it barely surpassed 2020 levels, nowhere near 2019. So this is a seller's market. And San Diego, another one that increased very quickly. It's also leveled off and actually decreased. There was a peak in inventory. Inventory has gone down. It is above 2020 and 2021 levels, but not 2019 levels, and it doesn't look like it's going to get there. There are your Altos research reports. You could be getting the same data. Make sure you sign up to get these in your email inbox. I did all right on my predictions. I'm pretty much tapped into the market. I figured we'd see a leveling off of inventory, but I was certainly surprised by what's going on with the multifamily market. So we've got to continue to track that. Let me know in the comments below how you did on your prediction for the market. If you made one, I want to hear what you're seeing out there and where you think things are headed. Make sure you sign up for those weekly Altos research reports, and you'll also get the benefit of our weekly email newsletter. Almost 2,500 others are tracking the Southern California market, plus what's important for landlords and tenants and buyers and sellers right now. Check out this next video so you know where the Southern California market is headed. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.